The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now as we talk more about what is happening in this market trade, pleased to welcome back into the show Mike Miner with Professional Ag Marketing. And Mike, it's always great to catch up with you. I hope things have been going well.
Same with you.
Appreciate the time as always. Let's dive in and talk about what's going on in this market trade. And obviously, we've had some key data come out here last Friday with the USDA reports. Plenty of surprises there. A lot of folks having to digest those numbers. You throw in the 4th of July, which is always kind of a pivotal point in the grain markets each and every year. So you look at this market, big picture, Mike. Obviously, it's been weather. You throw all this data on top of it. It's led to just the volatility has continued in this grain market, hasn't it?
It has, and it probably will going forward here, given the numbers, especially out of the soybean market that we've seen in the last couple trading sessions after the acreage drop. The soybean volatility will probably keep things interesting in these grain markets for quite some time now.
Well, and talk about the soybeans here. Let's just start there in general. I mean, I think almost everybody was surprised by that acre number from USDA, 83.5 million. I mean, were you as well? Were you not that shocked by that number? I mean, talk about that acreage number a little bit.
Yeah, on the soybeans, I was really surprised, and I think the market was too, obviously, with the reaction they had to see the corn number come out at 94. That probably wasn't as big of a surprise. We had a lot of reasons to plant corn going into this year. Great springtime action. We had no real excuse to not get corn acres in. But to see that all come away from the soybeans and then some was a little bit surprising. Second largest drop we've seen since 1990 on the soybean acreage report from March to June. For that all to come out of basically, somewhat key areas on the soybeans, Illinois, Iowa, some of those decreases. North Dakota, not as big of a grower. Iowa. But to see that really drop off there, I think it surprised the market and will keep things a little volatile going forward.
Well, and obviously corn is king. We saw the increase there, and it was definitely, to your point, a good spring and more incentive to plant corn. What's your thoughts, though, as you look at the market? Did plenty of producers reward themselves on that recent rally ahead of that USDA report? Because I've heard it both sides. I've heard some people say they did reward it, and some people said, nah, they didn't reward themselves with that recent rally.
Not enough. And even going into that rally, a lot of these elevators, you've heard from a lot of different FCMs that new crop balance sheets for these elevators were tight before that. So we did get some selling done, I think, for the producers on that last rally we've had. When I look at it, it happened pretty fast and furious like the market always does. But the guys with working orders, I think, really benefited from this. A lot of people had orders that they could have forgot about that were working, 50, 75 cents higher in the market. And a lot of them hit, and we kind of came and quickly went. So I think guys who had some working orders really benefited from this rally. And I think that's a good lesson going forward, like we usually see at this time of the year. But maybe that'll be another reminder for this next rally if we do happen to get one in this corn market again.
Well, looking at corn, I think a lot of producers now are having to look at their balance sheets again and take a pencil to things because, D's corn on the board hovering just below that $5 mark. You look at cash bids in the countryside. I mean, it's anywhere from mid fours to, mid to low fives still for basis. So, how does one navigate this corn market right now if they didn't sell enough. Obviously, we had high input costs going in, so I know it's a delicate balancing act, isn't it, Mike?
Definitely, and you mentioned balancing act. So I think the question I've heard more than anything at this point is corn gonna drag soybeans lower, or is soybeans gonna drag corn higher? And when we start looking at how to handle this volatility and the spread between the two of them, we typically don't see that ratio between corn to soybeans dip much above that 3 level, and we don't spend a ton of time there. So one is kind of going to have to give to the other here. Basically, what that tells us at this point is hopefully we don't drop much more than $4.50 here in the short term on corn. And hopefully that doesn't mean that we're going to see much more than $14 on the soybean market. Now, one thing we know is that the trade, the funds, they like to push things a little bit hard, too fast, right? To try to fix the problem as quick as they can. So on the corn market right now, one is very hopeful, I think, that the soybean market can pull the corn futures higher and give you another chance at 50 cents higher near that 20-day moving average at $5.50. So, but we have to plan for the worst a little bit too. If you need to get caught up on sales, using really wide option strategies, really trying to protect yourself using a decent window that's still available to you today, I think has to be utilized in the corn market on these sales. And the soybeans, you get back above this, $13.75 to $14 area, you're in an area that really works again. It looks great from a profitability standpoint. It's the right time of the year. And I think from a chart perspective too, you don't want to spend much more time above this $14 range over the past couple of years. So I think it's a very nice point in the soybeans to really take a stab at it now. You got your rally that you needed ahead of this next Wednesday report, which will be the next big mover. But on the corn side, I'm sticking pretty heavily to options at this point and not trying to do too much at once. But you know that the clock is ticking at this day and age.
The clock is definitely ticking. Real quick thoughts on the wheat market. Obviously, we got Kansas City wheat harvest going on a little slower pace than last year. I'm hearing a few spring wheat concerns in some areas out there, but generally spring wheat looking okay. You got soft wheat, Chicago, that crop looking good. I mean, just overall thoughts of the wheat market. I know obviously we're still more expensive than the rest of the world, and that's a big factor here, Mike.
Yeah, you're looking at early harvest results from Russia. They've been a little bit disappointing so far. Increased talk that their harvest is probably going to fall below that 80 million metric tons or so. That'd be below the USDA's forecast of like 85. So we are looking at a situation over there that's helped support a little bit. Obviously, conditions within the United States here, early yield reports have been very disappointing as well. So looking forward on the wheat market, we had a really nice reaction today. I'm looking more at wheat down the road, I think. We've seen very minimal impact of the wheat market on the other grains here real recently. We've seen little impact from the Russia-Ukraine dispute here recently as well over the past year, pretty much just after the initial spike higher we had when the two went to war. And I think you'll see that play a bigger part once corn prices get back into the fours and you start to cheapen things up a little bit. We are going to get a little bit more competitive on the export market, and we're still not there yet. But for the grains in general, I think the Russia-Ukraine situation is going to play a bigger part once we get cheaper in these prices, and hopefully that'll mean that we can hold a little bit higher support level underneath of us, right? But I think we haven't really seen the true impacts of that war quite yet.
Great thoughts there in the wheat trade, the grains overall. Mike, let's talk livestock, and let's start with hogs. $100 hogs in these front month contracts. I mean, man, oh man, what a nice rally back here, but how much more room do we really have to go here, do you think, in this hog market right now?
Well, it's going to be a little bit more limited. We've got another handful of dollars to really take a stab at until we get towards those old higher levels that we had experienced a couple months ago. And when I look at it, you've got awesome fundamentals recently. You had some really good cash trade again today, just under $100. You had, cash around 99 or so get traded today. Been pretty light loads. This will be your smallest kill of the year this week that we're experiencing, and weights are pushing a little bit lower. Cool temps could rebound things this week a little bit. We'll see that forecast shifting a little bit from the looks of it, but we're looking at a situation with cutout. We were up again on this morning report. We were up a handful of dollars on the Monday report as well. So if we can keep that running, that'll be awesome. But bellies have been the one really holding us back. So continue to watch that if we can recover here. But that cutout situation is getting a little bit better, and it'll just depend if we can continue to get that to move higher here in the short term. But overall, things are looking up and up on the hog market, which you can't always say that in the last couple months. So we're getting a pretty decent recovery here, and we'll start running it into some pretty important resistance levels at this point.
Yeah, and you look at hogs and the relationship and the spread with the cattle market. Obviously, a different set of fundamentals going in fats and feeders right now. A bit of a rough day coming out of 4th of July, but overall, this cattle market just feels like maybe it's pulling back to test support to maybe make another move higher potentially. I don't know. What's your thoughts on that?
Yeah, I think it's really interesting that you've posted new highs in some of those further out months on live cattle with little to no new or good news really going on. So that's been interesting, I thought. Cutouts starting to take a little bit of a dip lower, which is normal seasonally. You start to really see some steaks get sold at the beginning of the summer, but at the end, you're usually shifting towards cheaper meat like hot dogs and things like that. So we'll see if that dip's starting to really take place now. Could see a little bit weaker demand going forward, I think. But cash continues to be pretty thin here. It's been slightly lower over the past few weeks. Weights should bottom, but will they? That's been a question I think worth raising here very recently. And looking forward, that'll be tracked pretty closely because we are still really current. And in the short term, we could see that staying true. So watch the weights. Watch if cutout really does start to tip over here, and continue to watch those further out months. But overall, we've had some really good supply fundamentals working in our favor on the cattle market, and now with corn prices moving lower in the longer term. We'll see if that has an impact on these cattle if we don't stay quite as current in the future.
Well, we always appreciate getting a chance to catch up with you, Mike. Before we let you go, any final thoughts you have for us here today?
Well, I would keep an eye on next Wednesday's report. We're going to really trade that hard on the WASDE. When I look at where prices are today, you need a significant yield decrease on the corn balance sheet to really keep things just where they are, even in this current balance sheet. So just with the increase of acres, seeing corn yield back off to about 176.5, that's basically going to keep things the way they are right now. And it's still, I think that historically would show that we've got a lot of premium in this market, even if that is the case. So looking forward, I think it's going to be a really hard struggle to keep moving corn yield lower enough to make a difference in the balance sheet long term. So those rallies, I think, when we do get them in the corn market, or if we get them, I think will be needed selling opportunities for these lightly sold grain producers like we talked about earlier.
Well, Mike, if folks want to reach out and work with you and the team there at Professional Ag Marketing, what's the best way to get a hold of you guys?
Yeah, give us a call at 507-449-2030 or go to our website at professionalagmarketing.com.
Always great to catch up with you, and I know we will look forward to having you on our Dakota Fest panel as well, coming up here in August. We're going to talk markets at noon on Wednesday the 16th, so looking forward to that in Mitchell, South Dakota. With that, Mike Miner, Professional Ag Marketing, thanks for joining us, and we will talk to you real soon.
Thank you, Jesse.